Okay, so Torchlight Energy absolutely got torched today. The stock down over 33% as the company issued over $100 million in share and took advantage of the stock being super high. This is huge news today because that is an insane amount of shares if you add it up based on what its market cap is. Market cap is sitting at exactly 1 billion and they sold almost an entire $100 million worth of these shares. That is over 10%. And they said they could issue another 150 million in stock. That is over 25% dilution right there, which is why the stock fell about 29% during the day and another 5.5% after hours. Before we start this video, guys, if you can just like and subscribe, it would mean a ton to me. I would really appreciate it. And we also have a Discord and link in the description below if you want to join and come chat with us. But Wallstreetbets has taken over this stock and things were looking peachy yesterday as the stock roared after hours to over $12 at one point and is now sitting at almost half of that right now. The stock is still up for the week, up massive for the month, massive for the 3 month, and just an insane amount for the past year, up still about 1,600%. Now the question is, do you buy this stock and how do you do it? Well, if I was to purchase this stock, I would do it based on options and not your conventional buying options, but actually selling options. And how I would do that is by selling puts. If I wanted to own this stock, I would sell a $5 put on the underlying asset. And it's what's kind of weird about this is even though the stock today is down over 33%, this put is actually down in value. So if you sold this put yesterday, you are still up on it, which is absolutely crazy because if you look at the implied volatility, it's 295%. I would go probably to actually July 16th is a pretty good expiration because it gives you a little bit of time as well. And you can see here $93 that you'd get to sell five. So you put up $500 in collateral, you would receive $93 in premium, and you would have to buy the stock if it drops under 5. So the stock would still have to drop $1.61 for you to have to purchase shares. Your break-even price on this trade is $4.07. You could also be a little bit more risky and sell a 7.5 if you think it's going to rebound, and you're going to get $258 for that. Just kind of crazy the amount that you could actually get. So as you guys can clearly see, implied volatility is huge for this. I would definitely take advantages if you're selling options. If you're buying options, I would probably buy a Leaps call. If you look at the calls on it, I'd probably buy a $7.5 call. And you can check right there, implied volatility is significantly less at 129% rather than the 300% that we just saw. So that's over 50% less implied volatility than the rest, which means if this does have some upside, you will be able to profit from that. Whereas if you bought a call, tomorrow, and you try to get this, you might not have as much because the implied volatility is over 200% still. So that's personally the strategy that I would use for this. But overall, Wallstreetbets, they were back today. They sold this stock and they jumped back into stocks like AMC, which were down 7.5%, and the market opened and then finished up about 5%, and then GameStop as well, which rallied almost 9%. A lot of them are still in, over 10% actually. So a lot of Wallstreetbets is still in. They're still firing on all cylinders, and they are pumping up these stocks. How much longer it could last is the question everyone's been asking. But for now, it's lasted the entire year. Since January, they've been running these stocks up big, and we're gonna have to just see what happens after that. So, anyways, guys, take it easy. Enjoy your day. Like and subscribe, and let me know your thoughts on this. Have a wonderful day, guys. Bye.